please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning. Welcome to Bazaar Morning Call. I'm Lata Venkatesh and with me is Sonia Shenoy. You may feel rained out now because the big monetary policy is behind us. Actually, the markets appear to be in a fine spot. Clearly, there was a troughing out yesterday, both on the Nifty and the Bank Nifty, above key support levels held yesterday, especially at 10,580 for the Nifty, and the Nifty Bank, the 10-day moving average, held up. So we are at least in a fine spot as far as the bulls are concerned after about 4 days of continuous selling. And secondly, the global markets are in favor of the bulls, as it were, in our favor, as it were. And thirdly, with the monetary policy behind you, at least that level of uncertainty is not there. It was a great policy in terms of the balance it achieved. So it looks like for the moment, the bulls definitely will not relinquish control.
Okay, yes, perhaps for the moment is the key word, right, or the key phrase. But, you know, also the FII selling has reduced quite a bit. I mean, yesterday we saw selling of around 80 odd crores. This is very less compared to what we've seen over the last couple of days. I mean, look at that. On an average, you've seen selling of around 200 crores over the last few days. And DII, domestic institution buying, has also picked up. So we saw about 700 crores yesterday. Also, we have the monsoon. So the first day of proper monsoons is always, you know, good for the bulls on Dalal Street. But Lata, on the RBI policy itself, yesterday I was speaking to Sanjay Shah, who indicated, you know, from Morgan Stanley, who indicated that this is something that was on expected lines. Generally, the central bank is preemptive when it comes to things like this. So not too much of an impact on the markets.
I would think so. Let me just first count the positives. In the first place, it was an amazing balance that the policy could achieve. It hiked and it didn't scare the market because it came with a neutral stance and it came with a unanimous vote. So, you know, it isn't that there are 3 or 4 people who are just waiting to, you know, hike again. That sense was not there. They gave a hike and it was, as you said, well anticipated, well telegraphed. Already the previous minutes had indicated. So that was a very important positive, that it achieved balance. The second big positive was it had a little for many sectors which were all incrementally positive. One, it increased the amount of SLR bonds that can count as LCR. So there's no mad rush to buy bonds. People can lend. That's a positive. A little bit more lending, easier lending will happen. And actually, at the lower end of the curve, yields went down for CDs, one-year CDs. If Kotak had a CD, or if HDFC Bank had a CD, or IndusInd had a CD, all those yields fell. Easier to borrow at the lower end. Secondly, the little bit of succor it gives affordable housing, a larger part is being counted as priority sector, so banks will want to lend. MSMEs can default up to 180 days, it won't be NPA. That forbearance is given up until January. So there's a little bit for everyone. In that sense, this policy is quite a well-rounded policy. But, you know, there must be 2 or 3 negatives which we should remember. One, look at the yields. At the end of the day, they ended at 7.92. So that can't be a positive. For NBFCs, clearly, that will hit home. For the entire system, that will hit home, that yields have gone up. Secondly, nothing has been done in terms of the buyer's strike that the bond market is suffering. One was expecting maybe some statements on liquidity or OMO. I don't know what the RBI can do. I'm not the expert on that. But the fact that there are no buyers for bonds in the bond market was not fundamentally addressed. And thirdly, you may achieve a great balance in terms of your statement, but out there are inflationary forces.
Yes.
I mean, what if core inflation went up, crude went up, the MSP turns out to be a very aggressive MSP. They can't do anything about that. They are data dependent. Yeah. So that is what the yield is reflecting. That even if the RBI is very neutral in its policy, reality is inflationary. Yeah. And you're seeing that in the yields.
Okay, well, we'll have, you know, a lot of time to discuss all this and more. By the way, we forgot to mention that it's a big rally across the globe as well. I mean, the Dow has conquered that 25,000 mark, that psychological, you know, barrier. It was up about 350 points yesterday, so looking pretty good there. Let's take a look at what our wise experts have to say as we head into trade this Thursday morning. Lawrence Belanco of CLSA says the Nifty needs to hold near-term support provided by the 50-day moving average to maintain the immediate upside bias following the formation of a higher pivotal low relative to the March lows, which formed at key supports of 9960 to 10,060. He says a failure to hold this short-term supply zone would imply that the Nifty is still working through a corrective cycle that is unfolding off the May 15th high. Nevertheless, he adds, given the impulsive nature of the advance of the March low, he does not expect a retest of the March lows.
No. Important that we didn't get to the March lows and we turned at 10,580 as it were. Let's get you money market views. Important today, day after policy. Tirthankar Patnaik of Mizuho Bank says rupee's sharp upward move yesterday was driven by the Reserve Bank's rate hike, but the currency has been stabilizing for a while now on the back of easing geopolitical tension and global commodities moving towards the 67 levels. Where we get 67. He expects the near-term range to be around 66.75 to 67.25 for the rupee. Basically, stable currency.
Okay, did he mean global commodities towards the 76 level for the dollar?
I think it meant 76 and not 67.
All right, because, you know, there is a surge that we've seen in crude prices overnight as well. The Brent now at $76 a barrel. Tirthankar Patnaik also says the bond markets have been factoring in an increase in interest rates for a while now, but the first since 2014 rate hike did end up raising yields at 7.9% levels. He says while the stance of the MPC remains neutral for now, the upward revision of the inflation trajectory for the fiscal at 4.8 to 4.9% for the first half of FY19 and 4.7% for the second half of FY19 meant incremental pressure on yields. He continues to expect the 10-year benchmark bond yield to trade in a range of 7.8 to even 8% in the near term.
So that's the point I was making, that reality is that it is inflationary. So even if your tone is very balanced, you know, if the Fed is, everyone is expecting the Fed to have 3 more rate hikes. Yes. Why would the RBI do one and done? Yes. It will also have to move in step with global inflation.
Okay, well, let's talk about the world markets a bit. As I said, it was a big rally across the US markets, the Dow conquering the 25,000 mark. Nigel is here to tell us more. Nigel.
That's right. The Dow hit a triple century overnight. It conquered the 25,000 odd mark, so it looked quite good. The key gainers were Boeing. That did quite well. And other financial stocks, the likes of JP Morgan as well as Goldman Sachs, both of them did well. But it wasn't just that. We also had stocks like Bank of America as well as Morgan Stanley. So financials basically led the rally that we saw overnight. The bond yields, well, they moved back towards that 3% odd mark. There was a bit of a sell-off in the bond market. This after ECB chief economist Peter Praet, he said that they're looking at winding down the monthly purchase program. And that's what led to a sell-off in bonds in the US markets as well as in the European markets. Well, the European markets, though, they ended more or less mixed. The CAC was a relative underperformer. The FTSE as well as the DAX, they put on some weight. But looking at the broader markets, well, the ATEX was a relative underperformer, ending with a cut of around 1%, while you had the Spanish index that did quite well. Shifting focus to the Asian markets early this morning. In fact, we had the emerging markets as well that were a tad bit mixed. The Brazilian index did end lower. No worries with the Asian markets, all of them trading with good gains. SGX Nifty as well, indicating a start in the green. Remember, Brent crude prices continues to hold below that $76 per barrel. Back to you all.
Okay, thank you very much for that, Nigel. Some red cues for us in the way crude is clambering back, but overall an extremely bullish global backdrop. But back to our big story back home, the first rate hike after 4.5 years. Let's invite A. Prasanna, the chief economist at ISEC PD. Good morning, Prasanna. Thank you very much for joining us. Well, 7.92 at the end of what was really a neutral policy with a much telegraphed, well telegraphed, much expected rate hike. Where do we go from here? I mean, why was the market so much up in arms, although the policy was neutral?
Well, the stance was neutral, but I would think still most participants in the market would expect further rate hikes. I would say the consensus would be for at least one more hike within this financial year, which is our view as well. But I think the couple of negatives for the market in the policy. One is that, of course, RBI governor and the deputy governor didn't kind of give away much on OMO purchases, which is what market wanted to hear. And it seems that RBI's approach is that obviously they target the weighted average overnight rate, but also that as of now liquidity is still in surplus. So they will react to it when it goes into a deficit mode, which probably will happen only in the second half of the fiscal year. I think the second issue is a change in the SDL valuation, which will definitely hurt banks and push up SDL yields, which means that, again, once that adjustment happens, again, some of the money from long duration G6 can shift into SDLs again in subsequent auctions. So overall, that particular move is definitely bad news for duration.
Okay, but how bad is it for duration? I mean, is it 7.95 and 8 in the coming weeks?
Yeah, I think it can touch 8%. It can cross 8% also. But see, I mean, again, that depends, like you said, on global backdrop. So if crude remains like this and US yields, and we do have a FOMC meeting, probably that will be crucial, how the market kind of interpret what the FOMC says, and then afterwards how the market interprets. So if it's even slightly hawkish, although base case should be that I think they should still only talk about one more rate hike this year, and the fourth rate hike should still be a question mark. But suppose that's not the case and US yields go up, then it's possible our yields can also go up. So I mean, I think frankly, it's the market positioning might be light. That could be the only positive for the market. But otherwise, I'm really struggling to see any positives for bond market.
Okay, well, one more rate hike this year. That's what we're talking about. But Prasanna, good morning. You spoke about crude and the pressure it could have on inflation. But what about the two other issues that everyone's talking about? Higher MSP price is one, and the other is a rise of spending by the central government because it's election year, and state governments as well. Put together, do you see inflation rise further?
Yeah, that's right. So, the way we look at it is, I think yesterday's rate hike was to address two risks, which was one is crude prices and other is rupee depreciation. I think they have internalized those risks in their inflation forecast. But what we don't know is, like you said, what is happening to MSPs. I mean, some prices have leaked out. On that basis, I mean, it's more or less in line with their 50% margin promise. So if once the final details come out, we can work it out. But yeah, that is definitely a risk. The second risk is, of course, on the fiscal side. And I'm worried not just about the central government, but also about the state governments. Because it seems competitive populism is the order of the day. And we are entering into a number of state elections. So, which means that overall the deficits will go up, the borrowing will go up one way or the other, and that will have an impact on inflation expectations. So that is the reason why, I mean, taking those risks, factoring those risks, we think that one more hike in this financial year. Now, why we are saying only one hike is we still think that something like MSP, for that risk to play out in inflation, probably it will happen with a lag. So if you stretch it into next year, all I can say is I think we are going to have more rate hikes next year. I think the cycle is going to be long, the hiking cycle. So for that, investors should be prepared.
Okay. Well, finally, Prasanna, nothing has been done to address the buyer's strike in the bond markets. Was anyone expecting anything? Can the RBI do anything at all?
Not really. See, I mean, I think there were some pressure points. One of them was the LCR issue, right? I mean, because of LCR just causing pressure both on the liability side and, of course, on the asset side, which, of course, they've addressed, which should ease up the pressure on banks to issue short-end papers in the corporate bond market. So that is definitely a relief. And then, of course, they've given again the MTM dispensation. They've extended for one more quarter. But beyond that, I mean, short of doing OMOs in a significant manner, RBI cannot do much. And definitely, I mean, with the kind of liquidity scenario we're having and with the kind of policy stance and having hike now, for RBI to do that kind of OMOs to support the market, I think is untenable. So I think, see, I mean, it's okay to call it a buyer strike, but ultimately what it means is the government has to pay the price for borrowing heavily. So I think that is a message which has gone out, and the governments and both the central and state governments have to take that message on board.
So your own expectation is a follow-up hike in the month of August?
We are right now agnostic about the timing. It could possibly be October because they've said it's a neutral stance. But again, it depends. I mean, we will get the MSP information. We'll have a couple of inflation prints. Also, what is happening globally. I mean, if crude prices soften from here, for example, then maybe they can hold off in August. So, yeah, I mean, the timing is a bit open now.
Absolutely. Data dependent, as they say. Thank you very much, Prasanna, for joining us with all those details. Yes, I mean, they can't do OMOs and liquefy the market at a time when they have hiked rates. Well, there's more comment on
yes, in fact, here's more from the FICCI president and market veteran Rasesh Shah, his views post-policy.
We are happy that we got this rate hike out of the way, because it was anyway expected. And if you see the bond markets, they had already priced it in. What I'm very positive about is the commentary. The commentary is very positive, very dovish, because as you know, the economic recovery is underway. There is actually surprisingly an overall positive mood. I think people have said, we are happy we got this out of the way. There is a sigh of relief, and I think the dovish commentary from RBI is what investors and industry members have taken actually positively.
Okay, well, dovish, I would assume this is more as a representative of industry, you don't want to say bad things.
Yeah.
So you say dovish. It was actually very neutral. They were hardly dovish. They were very clear that they will be cautious and vigilant. And the bond market is telling you that. That's why it's 7.92.
Okay, well, yesterday we saw a big spike up in the markets itself. How do you trade today? We'll tell you on the other side of the break. We'll also come back with CNBC TV 18's top 10 list of stocks to watch. To Bazaar. This morning, actually, the global cues are looking pretty good. Asian markets are up and about. In fact, the Japanese market is up more than 200 points and the SGX Nifty indicating a good start. We've had a good day after 3 bad ones. So let's see how today progresses. Our research team is here to give you the list of stocks that you can watch out for as we head into trade today. Of course, there will be a credit policy impact on financials, but how will they move today, Lata?
Well, actually, my sense is it's not very positive, definitely, for NBFCs. So the first point, it's a little difficult to say, will all the NBFCs or many of them be in the red? That's a little difficult because the market itself is in an upturn.
Yeah.
So, some of it, so that will be positive for those banks who are lending a lot. I mean, I would think Kotak Indus would be the obvious beneficiaries. And housing finance, banks have a little more leeway. They can bring more loans under priority sectors, so that they will give competition to the repcos, to the DHFLs. So my sense is housing finance, NBFCs could actually have a double whammy. First of all, the yields are higher. And secondly, they're going to get more competition from the banks. So sentimentally, that would be negative, those kinds of companies. And definitely a positive for banks that are already lending a lot. So say an RBI, an IndusInd, Kotak. The high loan growth banks are definitely going to be advantaged.
Okay, the high loan growth banks are going to be advantaged. Don't know about the real estate companies because, higher rates means negative for a lot of these real estate companies. But DLF had an analyst meet, so let's find out more about that. Sonal, what did they say?
Well, Morgan Stanley has written on DLF and it's quite a positive commentary from them. Well, they say that the management is positive about the company's outlook. They expect the sales momentum to continue from first quarter FY19, expecting sales velocity of around 2,000 crores in FY19 and expected to grow further in years to come. The rental arm, that they're expecting a growth rate of around 15% for that particular segment of the company. And also in terms of debt, they expect the company to be net debt free once the restructuring of the whole, selling of the rental arm is done. And I expect the stock to do well today in trade.
Okay, that's a positive. If affordable housing becomes more affordable, then logically real estate companies should benefit. But I don't know if a DLF builds so many affordable houses.
Hardly.
Yeah, exactly.
They're more into the premium
affordable for
segment.
a very different segment. Okay, Mangalam, there was also an HUL analyst meet.
That's right, Lata. So it's a season of analyst meets and brokerages are fairly impressed with what the management had to say or the glimpse into the future that the management gave as far as HUL is concerned. They shied away, of course, as usual, from the pedantic details of, sales, margins, etc. But what they've said is that they're going to use data, much more advanced data analytics to predict demand forecasting, reduce costs wherever they can. And HUL had a strategy earlier called Winning in Many Indias, WIMI. They've deepened the scope of that and they will launch regional products, should help their market share gains. CLSA says that they are sanguine on the stock with a target of 1,650 rupees on the target price. Jefferies also believes that they're convinced of the company's superior algorithm. Remember, they use advanced robotics for their distribution system, have a lot of mobile apps for retailers as well. All this to improve efficiency, so they too maintain their positive rating on the stock with a 1,680 plus target price. Valuations are elevated, but then again, both the brokerages unequivocally saying that the company is best in class.
Okay, the company is best in class. Yes, no doubting that. But Anisha, what about the other stocks that are in the news?
I have a whole host of stocks that we need to watch out for trade today. Sonia, starting with Reliance Power, wherein there is a bit of dampener coming in. Delhi High Court has rejected their plea to mine additional coal for this Sarsen power plant, so expect that one to be in red. Moving on to Sadbhav Infrastructure, where the board has approved fundraising. They are looking to raise around 190 crores via debt and up to 3,000 crores via other securities. Important to note what would be the use, and is it just an enabling resolution? Because remember, the company's market cap is around 4,200 odd crores, so 3,000 is a big number there. Talking about fundraising, KTTL is also planning the same. In fact, the board is going to meet on June 11th to discuss fundraising options. GMR will be in focus as well, wherein the promoter have bought around 1.53 crore shares over the period of last 3 days from the open market. That comes to around 0.25% of equity. Let's see how that one reacts today. Other than that, microfinance companies like Ujjivan and Bandhan will be in focus, because remember, Macquarie has initiated on both these counters and the Indian microfinance sector. They are constructive on both these companies, so let's see if they react positively to that. And ASM, additional secure surveillance measures, has been the kryptonite for mid-cap space. Today, the additional names are Actions Construction Equipments and Ivory RCL, so expect them to be under a bit of pressure. Back to you.
Okay, thanks a lot for that. Well, guys, here's a quick recap now for top stocks in case you missed out on them. Expected to gain today: Kotak Mahindra Bank, RBL Bank, IndusInd Bank, DLF, HUL, Sadbhav Infra, KDDL, GMR Infra, Ujjivan and Bandhan Bank. While stocks that could be under pressure are Repco Home Finance, DHFL and Reliance Power.
All right. Well, that's the micros that you have to keep on the table. But here's more. Emerging markets are wobbling, but are not in bear territory. That's the word we got from the global chief strategist of Morgan Stanley, Ruchir Sharma. In an exclusive conversation with CNBC, he discusses the sell-off in emerging markets and why he thinks they are still good investment opportunities.
In terms of emerging markets, have already had a lost decade, because if you look at it from where emerging markets are today compared to a decade ago, emerging markets are still about 10–20% lower in dollar terms. I'm talking about equity markets in general. The US stock market since then, is, as we know, is up about 70% or something since it was where it was a decade ago. So I think that emerging markets have done a lot of the workout in terms of the excesses that they had. And that's why we've had this underperformance. So I don't think that this is the start of a new bear market in emerging markets. If you look at the previous bull markets in emerging markets, it was perfectly natural to get these kind of wobbles in the first year or two. So I still feel that there's plenty of opportunity available in emerging markets. A lot of the excesses have been cleaned out. Now, of course, there are pockets which are there of concern. We typically find that, that in terms of crises or bounce back in financial markets, it's the locals who know better than the foreigners do. The foreigners are usually last in terms of getting into a market and getting out of a market. And that's the issue with Turkey too, that foreigners have been buying into the Turkish market for the last couple of years, and the local people have been exiting. So last year, 12% of the Turkish millionaire base actually fled the country. Now that's a really staggering number, and the only country in the world where the numbers were similar was Venezuela. So it just tells you what's going on.
Okay, so he's still fairly bullish on emerging markets. He does say there is potential here. Let's take a quick break. Our technical experts Ashwini Gujral, Sudarshan Sukhani and Mitesh Thakkar will be with us on the other side.